What's going on, guys? Welcome back to another video. Today we're ending the day green once again, so it feels very good to continue pressing on a green week with no losses. So we're going to recap the trades, the goods, the bads, show you what we could have done better, and all that good stuff coming on up. So let's get into sharing the screen. Alrighty, so let's start with AMD. I just actually did a trade like a few minutes ago on AMD. Really small, pretty much nothing, but I guess we can talk on it. It was just like a small little short trade. I could have held it longer, but I wanted to come on and do this recap video, so I ended up closing the trade out. But let's get the trades on. All right, so just did like a small 400 share short here. Was entering shares 100 apiece. It shows 200 share entries, but really I was doing 100, 100, 100. So anyways, took 4 entries of 100 shares on AMD on this top here. Pretty much anticipating we were getting ready to kind of relax and go through a correctional pullback on AMD. But anyways, I ended up shorting 400 shares. I made 12 bucks on it. Really, the takeaway from this is, hold on, let me pull something up too before we get going. Let me show you. Okay, so for one, the average true range on AMD per day is typically $1 per share. Right now, we're at $1.38, so we've already moved well above the average true range. So this is part of the reason why I was kind of confident in maybe going short on this top. Even though it didn't really, I didn't allow it to play out that much, I did figure we would be on sort of a topping correctional move on AMD. For one, because we already moved the average true range, which basically means the stock has already performed its full movement for the day. So what this stock AMD would typically see is a movement of around $1 per share a day. We've already moved $1.38. So it's already performed 38 cents better than what it would typically perform on the day. So that means that it's had a above normal trading day already. So to short this top was, to me, kind of expected. You can argue that it was breaking the trend line, kind of coming down. But at the end of the day, the stock had already moved up very well on the day, above its average true range, and there was also a divergence. I don't know why that's not on my chart. Let me pull up the RSI because we will need to use that. Apply. Okay, so then if I kind of pull this up, you'll see that there is a divergence, right? So AMD was cruising into new highs. Since then, it had been trailing off on momentum. So to see that it's pulling back here would make sense, right? Stocks cannot continue just to keep going up, going up, going up without sort of pullbacks or corrections, especially while the momentum is dying out. So pretty much just a straightforward trade there, small short trade. And all right, on to the next one. GOOS, G-O-O-S, made a trade here. It was for a bottom bounce dip buy. So I missed the whole downward move on the short today. And so I wanted to take a long on it, see if we get kind of a bounce move. We got a small one, didn't really get much follow through. And that's another thing we'll touch on, is that when you try and buy a bounce on a stock that has a really aggressive straight downtrend, usually the bounce plays don't work out that well. So the question here would be, well, Connor, why did you attempt it? And it's not that they don't bounce well. Sometimes they'll have great bounces, sometimes they won't, but you just have to be mindful that when you're trying to buy a bounce on a stock that does have a very apparent aggressive downtrend, that the bounce play oftentimes won't work out as well as some other times. And when we say some other times, whereas like if a stock makes a couple aggressive moves down, right, you can have an aggressive big candle down, couple candles down, aggressive move, right? But if you look at this, it was trending, candle down, candle down, candle down, 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 down. Candle down, 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 down. So you're not really just getting quick, fast price action drops. You're really trending down. So the trend is down, so it's harder to reverse that trend. Where if it's just a move down, it's easier to reverse that trend or that move. But when it's really trending down, the pressure's to the downside. Occasionally, we'll see them reverse. But just know that if you ever try to buy a bounce on a stock that's really trending down, once you're starting to see some uptrending or bullish movement, you do have to be mindful of the trend and understand that the likelihood of the bounce working out usually isn't going to be as great, but it doesn't mean that you can't attempt it. So the setups were looking decent here for a long trade, right? So if we kind of take a look at this, RSI is nothing here. Pretty much we kind of bottomed here, started putting in some higher lows, right? And then we kind of have this little mini change in direction there. You can kind of see it where we're kind of bouncing higher low, and then we start to change up over direction. So I started getting long on these candles here, anticipating that this candle would break up and out, right? And we'll start getting over some of these resistance marks, and then we can lead into a nice pop or a squeeze. Note that when you're doing a bottom bounce on stocks like this and you get it and they start moving up and starting to get over your breakout levels, if they pretty much don't instantly squeeze for you, really start picking up, usually it's going to reverse on you and go the opposite direction, as you can see. So I end up getting long 1,000 shares here at 35.42. Pops up, comes down. These candles were actually kind of aggressive these candles actually looked really aggressive when they were coming down, but they held that trend really nice and then got sucked back up, which gave me the confidence to buy another 1,000 shares. So then I bought another 1,000 shares at 35.68. We press up over this first mini resistance and we press up again, and we're really just not seeing the momentum coming in on this breakout move. So that gave me the signal to start taking those shares off. So then I sold 500 shares at 35.70, sold 1,000 shares at 35.75, and then sold another 500 shares at 35.60 to close out the trade, resulting in a $175 win. So do we want a $175 win for 2,000 shares? No, not really, but we'll take what we can get. So the setup was there, didn't have follow through, and we managed it as best we could. All right, on to the next one, which is NSYS. This was the penny stock today that was popping up pretty aggressively. One pretty small share size on it was because, based on the characteristics of the stock, it can very well be a big supernova runner. We just didn't get the momentum to follow through on the day, arguably because it was already up pretty big from $2 all the way to $7 or $8. That could have been it. If we look at the daily chart, there was definitely resistance, right? If we go look at the daily, or actually we have to go like 3-year chart. If we look at the 3-year chart, you can see this big candle here. So we kind of spiked up into that resistance anyways. Maybe tomorrow's good, but today the bulls really didn't have too much of a party since market open. All right, so for me, we start popping up in the morning. I'm like, well, you know what? I don't think we're just going to instantly go on a rip with the stock. So I'm just going to start sizing in pretty small on the stock and try to hold it and see if we kind of start trending into a supernova type stock formation or setup. So I start small. The stock really never gives us that, that move we need up, and we never really get the formation of the supernova to kick off. So anyways, I get long 200 shares at 7.14 and then take those shares off at 5.74. So I got dumped on pretty hard here. You may be asking, why did you let this go against you so much? And really the reason is when I was currently in this trade, I was trading something else. So my attention was on another screen while I was making those trades, knowing that I only had 200 shares here. So knowing that I couldn't really get hurt too bad if worst case scenario did happen. So in my mind, I already had planned for worst case scenario. This rolls over, dumps out while I was in that trade and trading other things. So didn't really upset me. And so I ended up getting out these 200 shares at 5.74, which is like right here. And so I was willing to hold on to this trade until this pre-market support started to break, because we can get moves like this and then moves back down to test pre-market support. And if it holds really well, we can have reversals that are really, really strong, go on massive rips. So I was comfortable holding the 200 shares down until that pre-market support had really been breached. And once it did, that's where I took my trade off just below at 5.74. All right. So anyways, $200 loss there on NSYS. All right. On to the next one, which is SE. This is the stock that I made good chunk of money on yesterday. Those are trades from yesterday. So from today, the first trade wasn't bad. Obviously, could have held and did a little bit better. But we pop up in the morning really strong. We hold consolidation here very nicely. And you'll notice that in this pullback, what kind of gave me the signs to want to get long on it, thinking that we'd continue higher here. And really, I should have held this a little bit longer and capitalized on this move up, but that's okay. So anyways, we get a strong move up, right? Candle pulls back, hanging out, right? So really just consolidating. There's really no aggressive pulling back candle. We get this candle here. You can see there's a lower wick on it. So it did in fact drop lower, right? So imagine you're watching it, pulls back. Then this candle goes beat red down close to the 9, and then it gets bought all the way back up, performing a bullish engulfing candle to the past 2, right? So this one green candle engulfs these two doji red candles, right? So now you have a bullish engulfing setup. From these 2 red to this green, it comes all the way back. So it was red, and then it gets bought back all the way up to bullishly engulf these previous 3. Next candle opens up red, stays within the body. Next candle opens up. We start to break over these previous candles. So this, again, looking to have continuation to the upside. So I go long 2,500 shares at 35.87. We pop up. I take off 200 shares at 35.95. And then I sell the last 2,300 shares at 36.03. So small little trade in there. I think I made about 300 something bucks. And then later in the day, I took this trade over the high-a-day break. Really didn't get that much follow-through, and it was a good setup to take. The follow-through wasn't all that great. So you can see once I get in, I didn't hold it very long, and we'll discuss that. And this comes down to the average true range. And I think there was also maybe a divergence on it. Let me see. Oop, wrong one. Yeah, there was. Okay, so anyways, the setup here for the long play, really good, right? So we kind of pull back here, we pull back again, and then we bounce all the way back to the high. So, right, we have this really aggressive down move, and then we bounce all the way back to the highs. We have a slight pullback here, but no aggressive sell-off at previous resistance, right? So think about it. When we previously got to 36.40 here on SE, strong pullback. Bounce back up, strong pullback. So we're resisting and pulling back strong right around that 36.39, 36.40 price, right? And we bounce all the way back up to that price. Look at how aggressive the pullbacks were before at that price, and then look at how aggressive this is. Not aggressive at all, right? So if sellers were willing to sell this beforehand at these prices, why are they all of a sudden not willing to sell here at these prices? That signifies to me that this probably wants to move higher in regards to, yeah, it probably wants to move higher regarding how it was selling off previously at those levels, and now it's not. So I get long 2,500 shares for a clean break over here on the high a day, go long 2,500 shares, 36.46, pops up to 36.55. I sell 2,000 shares, and then it pops up a little bit more to 36.59. I sell 250, and then I take off the last 250 shares at 36.51, netting another good, decent win. So get up to 572 profit on SE today. Now, the reason that I took that trade off pretty quick was, for one, I was making money, but two, I didn't feel confident in actually holding it. Once I had gotten in the trade and it started working, then I started to look around at all the other signals that I didn't pay attention to before taking the trade. Previously to getting in the trade, really what I was just focusing on was the price action and the movement of the stock that gave me the reason to get in. But I hadn't looked at any other indicators to help me, decide how long I might want to hold or what the follow through was going to be. So after I'd purchased in, I looked and realized that I bought right into a divergence, sort of, right? Whereas from here to here, we're moving up and we're trending higher, right? From here, we're trending higher, we're trending higher. But the momentum is starting to fade down. So on this breakout, you're buying a fresh new high breakout into lower momentum than previous on these high-a-day moves. So your momentum's not favoring you to the upside as much as it was previously in the day. And then also, when I looked at the average true range when we were up here, the stock had already traded its average true range. So from a logical standpoint and a probability standpoint, you can't expect that the stock is really going to move too much higher over this mark, considering it's already moved its normal amount that it would typically see on any given day. And since today, SE didn't report earnings, it doesn't have any sort of dramatic news, it's not really in a breakout position, you can't expect it to really move too much more than its average true range. It should respect that number. But if this was a day where we were buying this high-a-day move and SE just had news that all of a sudden they cured cancer, or it was breaking out of a technical setup on like a daily chart or a 4-hour chart, at that point, we could expect it to maybe move more than its average true range. But on today, given the circumstances, it shouldn't have moved too much more than the average true range. And shortly after, you can see we press up, it stalls, and then it rolls over, right? So that was a trade there in SE, netting 572 bucks. All right, on to the next one, which I should have held, and I didn't. But it would have been a really, really strong winning trade if I had. So anyways, this is VIPS earnings play coming down. Initially, I was kind of watching short, wanted to see how it reacted once we had this drop. As soon as we got the first initial drop in the day, this stock was getting bought up pretty strong, back up to initial high a day. And then I take a long here on this candle, 2,500 shares at 11.48, end up selling them out at 11.40. So pretty much bought in and sold out instantly when I shouldn't have. And part of the reason here was by the time of day that it was in the trades that I'd taken, I think I was up about $400 on the day, and I took pretty big size on this, and I really just let my emotions trick me into taking the trade off because I was seeing the P&L, and when I bought, the candle came down. So instead of kind of going from like into a trade into more of a green break even, P&L, I went into the trade and then went right to like a negative 200. And so at that point, I'm like, ooh, right? And then if it did fail this top rollover on 2,500 shares, you'd be going from like 200 to 500 or like a $600 loss, depending if you get caught in some slippage. So I was like, do I really want to put myself in that position to take that loss? So I was like, you know what? Let's not. We're already on a green day. Let's kind of take a step back. And so then I took the trade off. So for me, that was kind of jumping into a trade without taking too much time to really analyze it. Still, the trade ended up panning out. If I would have held this, we could have had probably a $500, $600, $700 winner on this position. But I ended up taking off for a $200 loss, right? So really your takeaway here from this stock is it was an earnings report. Many times on stocks like this, when they have an earnings report and they're trailing down and they have a trend to the downside pre-market, when they open up during market hours, a lot of people look to short them to the downside. And if the move fails to the downside, anybody shorting this stock will get caught and trapped and they'll squeeze back up. And a lot of times will be a good move over the first high a day mark, like you've seen here, kind of pressed up, resisted, and then it squeezed there with some pretty decent volume. Those kind of the takeaway there. All right, now the last stock traded on the day was actually one of the first, but the one that I made the most money on was TWOU. Could have definitely done better. Looking back at this, you're always going to learn how you could have done better on some things. Initially was watching the stock long. All right, so I watched this first candle come up, squeeze up, and then instantly next candle just hammers it down. So this is similar to what I was telling you about on SES, where we had a bullish engulfing candle. Here we pretty much have a bearish engulfing candle, right? We see this candle squeeze up, next candle, red, engulfs the whole thing. This gave me the sense to want to short it. So we have a bearish engulfing candle. So I get short on this big red candle, 2,000 shares at 25.02. You can see I covered up those 2,000 shares at 24.79. When I shorted here and this candle dropped, my P&L was actually 1,000, right? So I thought I had a $1,000 winner pretty much instantly. As soon as I clicked short, it was like instantly 1,000. And I'm like, whoa, okay, I'm willing to take that $1,000 right now because that's going to give me some good cushion. I could have held it a little bit longer. I could have taken off 1,500 shares or 1,000 shares and caught a little bit more of this candle here. But I mean, I really clicked the button and instantly is up 1,000. That sort of quick movement in P&L can really cause you to make, quick trading decisions. So I ended up taking those shares off for a win of only 400. My P&L was 1,000. I closed out the trade, and when I looked at the spread was 50 cents. So the reason I was up 1,000 was because that spread had widened so much right after my entry that it looked like I was up 1,000 because of the spread difference from the bid to the ask. So in taking out a market order, you're going to get filled in between that spread, and you're not going to get the low of the spread. So I wasn't going to get the 1,000, but I didn't know that initially looking at the price in the P&L. I see 1,000. Okay, I'm up 1,000. Sure, I'll get a little slippage. Maybe that 1,000 win goes to 800, 760, but I can easily take it off, create a solid win. When I do, I only end up with 400 profit, which makes sense because the spread alone was 50, almost 60 cents, right? So anyways, $400 win there on that first trade. Then the next trade here that we take, which is the big winner, which I should have held a little bit longer, at least held some, but didn't. And partially that was because I was already railing in a good win. And I'm like, I'm just taking this money in, and a lot of times you're making big money on trades. You can sometimes get off guard and you don't pay attention to the signs and the signals and things that you're seeing to allow you to hold something longer because you're excited about the win. But anyways, right, we had this really aggressive down move. So after seeing this really aggressive move down in the morning here on TWOU, you got to think anybody who is willing to go long the stock, right? Say in the morning, if you're thinking long bias a stock, which I was initially, and then if you did attempt getting long here on this first 1 minute candle, looked great, started spiking up. If you got long there and then you got crushed coming down here, the likelihood that you're going to come back and try to trade this thing long bias after you just got smoked, you're probably not going to do. So you get these really aggressive down selling candles. Anybody who is probably trying to get long on it initially out of the gates or early in the morning just got smoked. So they're pretty much on the sidelines now. They're not going to want to buy this thing long after taking that loss. Or anybody watching it long bias that didn't trade it and seen this aggressive down move right in the morning is probably going to be more hesitant to watching the long side now. So now people's minds are probably shifting to the bear side. So that's exactly what I did. I shifted to the bear side, and we see this starting to trend down, right, into pretty much just a bear flag. Just call it that. The selling volume was still strong and increasing as we were trending down. So I go short again, 2,000 shares at $23.91. We snap down. I take off. Yeah, this buy isn't accurate. It shows that I got out 1,900 shares at $23.34, which is true. But I was actually taking them off by like 500, 500, 200, 200, 300. So it's just grouping together all of my buybacks into one. So in reality, there was multiple buybacks as this was going down. As it was going down, I was taking shares off, taking shares off, taking shares off, taking shares off. But the way that this is presenting, it's just saying that I took it all off in one swift 1,900 share purchase buyback, which isn't actually accurate. So anyways, I get short 2,000 at $23.91. I take off 1,900 at $23.34. Then my last 100 shares there at $23.14. And then you can see it fades out like another point, right? 23 down to like 21. Yeah, fades another point. So, after seeing this really aggressive down drop, I should have been more patient and holding like, 500, 600 shares or something, but it wasn't. And so we end up resulting 1,600 green there on TWOU. So from all the trades on the day, we netted a profit of almost 1,900, just shy of 1,900 by $4. So another really, really solid trading day. I will say this, there was one that I missed today that would have resulted in a great win, which was SDC. Now, this one was on our watch list this morning in the pre-market stream, and we said watch it short. And it was on like a side screen, and by the time I really started watching it, the candle dropped to here. And I didn't short it, and then it pressed down a little more, and then I didn't short it. Next thing you know, it just gets smoked. And I'm just sitting there going, you knucklehead, you should have pulled the trigger, stopped being a Sally, and then made a win. Something like this, I probably would have been in short like 5,000 shares, maybe. Right? On these lower priced ones when they're earnings, I do tend to get a little aggressive and try and slam in like a 5,000-6,000 share trade and make a big win on it. Would I have done it? Maybe. Considering the fact that I was hesitating even getting in, probably not. But those were all the trades in the day. So really solid day trading again today. So hopefully we can continue that momentum and the green days into the rest of the week, right? So again, thank you guys for tuning in. As always, feel free to join us in our premium or private groups where we do this every single day. Very affordable prices. Anyways, links in the description, takes you to our website, and then you can join it to any one of our private groups and trade with us live every single day. Other than that, guys, I appreciate your time, and I'll see you guys on the next video.